Hello and welcome. With everyone's account taking a hit in the last couple of weeks and many stocks tanking, here are encouraging stock market corrections and bear market quotes and wisdoms from investment legends to help you stick to your investment thesis at this time when you may be questioning your strategies. These will help you stay the course. Remember that these are legends with almost a century of investing experience combined. Their principles were that every investor should practice patience, be disciplined, and more importantly, they believe investors should control their emotions in a bumpy, bear market such as the one we have now. To most of these legends, what we see in the market today is normal and expected, and you'll see why in some of these evergreen investing quotes and words of wisdom. So as you evaluate your portfolio and navigate the market ahead, be it bull or bear, remember these quotes and words of wisdom from these investment legends. Number 20. History provides a crucial insight regarding market crises. They are inevitable, painful, and ultimately surmountable. As said by investing legend Shelby M.C. Davis. Number 19. Though tempting, trying to time the market is a loser's game. $10,000 continuously invested in the market over the past 20 years grew to more than $48,000. If you missed just the best 30 days, your investment was reduced to $9,900. As said by investing legend Christopher Davis. Number 18. The upward move at the beginning of a bull market is almost always huge compared with the vacillations late in the bear market. If you try to pick a bottom, you will miss a good part of the action. As said by Kenneth Fisher. Number 17. The last leg of a bull market always ends in hysteria. The last leg of a bear market always ends in panic. As said by Jim Rogers. Number 16. Any bull market covers a multitude of sins. So there may be all sorts of problems with the current system that we won't see until the bear market comes. As said by investing legend Ron Chernow. Number 15. The investor's chief problem and his worst enemy is likely to be himself. In the end, how your investments behave is much less important than how you behave. As said by the investing legend Benjamin Graham. Number 14. It is only in a bear market that the value investing discipline becomes especially important because value investing, virtually alone among strategies, gives you exposure to the upside with limited downside risk. As said by the investing legend Seth Klarman. Number 13. A 10% decline in the market is fairly common. It happens about once a year. Investors who realize this are less likely to sell in a panic, and more likely to remain invested, benefiting from the wealth-building power of stocks. As said by the investing legend Christopher Davis. Number 12. Far more money has been lost by investors preparing for corrections, or trying to anticipate corrections, than has been lost in corrections themselves. As said by the investing legend Peter Lynch. Number 11. Predicting a downturn is not critical. The important thing is what you do when a significant downturn happens. As said by the investing legend Naveed Abdali. Number 10. It's absolute cockamamie crazy to sell stocks after they drop. Instead, you should say, "Today there's a first-rate bargain and I'm buying." As said by the investing legend Charles Ellis. Number 9. Invest for the long haul. Don't get too greedy and don't get too scared. Shelby Cullom Davis. Number 8. Every economic recovery since World War II has been preceded by a stock market rally. And these rallies often start when conditions are grim. As said by the investing legend Peter Lynch. Number 7. You need to know the market's going to go down sometimes. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. As said by the investing legend Peter Lynch. Number 6. You make most of your money in a bear market, you just don't realize it at the time. As said by Shelby Cullom Davis. Number 5. Recessions are there to take your investment game to the next level. A recession should help you reach your targets sooner. Naveed Abdali. Number 4. A market downturn doesn't bother us. It is an opportunity to increase our ownership of great companies with great management at good prices. Warren Buffett. Number 3. There will be bear markets about twice every 10 years and recessions about twice every 10 or 12 years, but nobody has been able to predict them reliably. So, the best thing to do is to buy when shares are thoroughly depressed, and that means when other people are selling. As said by John Templeton. Number 2. We all know this one. It says, "Be fearful when others are greedy and greedy only when others are fearful." As said by investing legend Warren Buffett. And lastly, number 1. Stock market corrections, although painful at the time, are actually a very healthy part of the whole mechanism, because there are always speculative excesses that develop, particularly during the long bull market. As said by investing legend Ron Chernow. That's it. We obviously can't list them all. Please excuse any errors, omissions, or misquotes. Don't forget to subscribe and like to encourage us. And we hope to see you in the next one.